Today I want to look at assets and liabilities, and you need to know the difference between them to sort out your finances. It was Robert Kiyosaki, the Rich Dad Poor Dad guy, that said an asset puts money in your pocket and a liability takes money out of your pocket. Let's have a look at this in a bit more detail. Now, an asset is something that you own, usually outright, that has some value. Let's take a look at your house. This is usually considered an asset by most people. According to Robert, it's a liability, and the reason is it takes money out of your pocket. Look at the bills that you have to pay, for instance. These come under various expenses: mortgage, gas, electric, phone, property taxes and maintenance. Let's say these come to $300 a month. So you're losing $300 a month just by being in your home. So now it has become a liability. But hang on, I hear you say. You say you bought your house for $90,000 and now it's worth $100,000. So surely that $10,000 difference makes up for any expenses. Well, unfortunately, when you're working out whether something is an asset or a liability, you don't take into account the value. Going back to our example, your house is a liability because there's $300 worth of expenses. But what happens if you decide to rent out the spare room? Now you have an income, let's say $600 a month, and so your net is now $300. Suddenly your house has become an asset. The house is said to have a cash flow of $300 a month. Let's take another example. Another thing you own would probably be a car. But this comes with lots of expenses: fuel, maintenance and car tax and stuff. So could you really make that into an asset? Well, not really, unless you want to rent out your car, and you can't really give driving lessons. So unfortunately, a car is well and truly a liability. Now, if you're lucky enough to own a boat, is that really an asset or a liability? It may be worth a lot of money, but it still comes with a lot of expenses. So, is there any way of reducing those expenses and even turning your boat into an asset? Let's say you owned a piano. This still comes with expenses, but admittedly they're not that much, just a bit of tuning and a bit of maintenance. But it still puts it in the liability category. But you could change that. Could you give piano lessons, for instance, and get an income of, say, $200? So now you've got 200 coming in, 100 going out, so a net of 100. So now the piano has become an asset. So you've got to look at all the things you own in this sort of way. How can you turn your liabilities into assets? So there it is, an introduction to assets and liabilities.